And following an attack this weekend on Saudi oil facilities, joining us now is Goldman Sachs head of energy research, Courvalin. And Damien, I guess if you thought that the energy volatility was coming down and that we've seen the high in prices because they did decline sharply last week, that's absolutely wrong. Now what do we expect?
Yeah, so we think from here the move is still higher. We have a significant supply shock on a market that was already historically tight. And the only buffer you have today really is demand reduction, right? We don't have any inventory buffer. OPEC has very limited ability to ramp up and no desire to do so. And so really it has to come out of demand. And that takes another meaningful leg higher. Our forecast is 135 for the second half of this year. Now, a lot of uncertainty, you point out to the price volatility, so you should expect that. But again, we're losing a lot of barrels right now.
What about the prospect of Europe joining America's Russia oil embargo? First of all, is that even possible? And second, is that in the market? What would that mean in terms of how much fewer barrels of oil come out of Russia?
So it would be a significant shock for Europe and for Russia. And that's why Europe has been reluctant so far, and particularly countries like Germany, who are very dependent on Russian oil. So you've seen the countries that have implemented it least exposed, right? The UK, the US. Based on recent statement, we would still think Europe waits to implement that because it is a significant shortfall for them. But it clearly tells you which way those sanctions are going, right? The escalating sanctions are the deterrent for other buyers. And that's why Russian exports are falling right now. Under sanctions, you can export energy. But because buyers are reluctant to do so, this is having a material impact already.
And what about Saudi, which I mentioned? We saw the attack on the Aramco facility. There's also some articles today discussing the relationship between Biden and the Saudis and how we've lost them a bit. What is the status of that relationship and whether they can step in? Saudi Arabia can step in here and help the U.S. and Europe, the West, meet the demand that's being lost from Russia.
Yeah, a few points there. So first of all, OPEC decisions have to be unanimous, right? So within the group, you have Russia, you have Iran, Venezuela, who all see some leverage from higher oil prices. So that makes a decision difficult. Until the last few days, second, it wasn't obvious that Russian exports were falling, right? We're still loading barrels contracted before sanctions. I think finally now we're starting to see some evidence of that. Third, in this current geopolitical environment, it may take more to see the group respond. Think as well from a Middle East perspective, they're sending a lot of barrels to China. Russia wants to send barrels there. So that's also complicating their calculus. So in the end, there is a little bit of capacity left. Probably takes sustained high prices to bring it on, but it doesn't really solve anything, right? We're looking at second lowest spare capacity. And if that comes online, there is absolutely nothing left, right? We have zero inventory buffer. We'll have zero spare capacity in a world where high food and fuel prices typically drive social unrest and disruption. So those barrels coming online maybe help prevent rationing, but they don't really help solve the critical tightness of the oil market, which takes me back to the core of our bullish view, which is there's only one solver here, which is reducing demand through higher prices.